In this video, we're going to recap the market headlines for Saturday, June 15th, 2024. If you are interested in supporting this channel, please make sure to like, comment, subscribe, and please make sure to use the affiliate links in the description box below. In the description box below, you can find affiliate links to Apex Trader Funding, Topstep Trader Funding, American Blue Cash Preferred Credit Cards, and others. If you support this channel and you want to support me in this content, please make sure to sign up using the affiliate links in the description box below. Before we get into some of our news headlines and some of our charts here on Saturday, I want to show you that I am running a 150K Topstep challenge. I'm currently at about, 153,934, spot 65. Mostly trading the NASDAQ, but trading some other things as well. So I'm currently sitting about halfway there, so I'm hoping that I can pass this challenge and get on to the Express funded account. So I am running a Topstep Trader Funding 150K challenge using Tradingview, and I'm about halfway there. Okay, guys, let's have a look at Bloomberg and look at some of our market headlines, starting with bump stock ban tossed out by Supreme Court and gun rights win. The justices voided a criminal prohibition in place by the Trump administration after the 2017 Las Vegas concert massacre. U.S. consumer sentiment unexpectedly falls to seven-month low. Longer-term inflation views inched higher in early June. So if you are watching the screen, you can see that our consumer sentiment has dropped to 65.6, and that came on June 30th. Okay, guys, some of our other headlines. Fed's Mester wants a few more months of good inflation before cuts. Some of our latest market headlines here on Bloomberg. Argentina's union calls strike to affect Vaca Muerta production. Canada's energy hub declares emergency after water main break. The market is blowing off what the Fed is saying about rates. William Donaldson, investment banker who led SEC, dies at 93. French chaos poses little contagion risk to Europe bond rally, and Hyundai Motors India unit plans IPO that would rival record. Okay, guys, now moving on to one of our interesting market headlines. This is on Bloomberg.com. The market is blowing off what the Fed is saying about rates. Hawkish chatter hasn't chased investors away from risky assets. Traders poured $2 billion into tech last week, most in months. The Wall Street axiom warns to, quote, never fight the Fed, end quote. But that's exactly what traders are doing, and it could spark a rally in some of the forgotten corners of the stock market. Federal Reserve forecasts and comments from central bankers couldn't be more clear. Investors are being warned that interest rates will stay higher for longer than they'd expected, with the median projection from Fed officials calling for one interest rate cut this year. And yet cash is pouring into stocks that benefit from lower borrowing costs. The technology sector had $2.1 billion of inflows this week, the most since March, according to data compiled by EPFR Global and Bank of America. Quote, the market is just not sold on the prospect of inflation and labor market readouts not giving the Fed the room for multiple cuts this year, said Keith Buchanan, senior portfolio manager at Globalt Investments. Quote, that stubbornness is keeping intact the environment that benefits risk assets. The central bank's projections for fewer rate cuts this year and the Fed Chair Jerome Powell's seemingly hawkish comments at his press conference on Wednesday didn't prevent the S&P 500 index from eclipsing 5,400 for the first time ever, which also happened on Wednesday and held through at least Friday. The benchmark is up more than 50% since hitting a bottom in October 2022, during a bear market triggered by the Fed's drastic interest rate increases that started in March 2022 and were aimed at taming runaway inflation. The question now for investors is, what will the market do when the Fed eventually does decide to cut? Historically, rate cuts have marked a key inflection point that has ushered in a strong equity returns, but only for cycles that aren't triggered by a recession like this one. That would explain why the latest flows data from Bank of America and EPFR Global show a rotation into financials, materials, and utilities, three critical groups closely tied to the economy that historically benefit from rate cuts as long as there's robust economic growth. The consensus expectation is that economic growth will remain sturdy, with the Atlanta Fed's GDP Now model projecting second quarter real GDP growth climbing to 3.1% annual rate from a 1.3% pace in the first quarter. Quote, there are very few signs on the horizon that you're going to see any sort of truly bumpy landing, said Carol Schlief, Chief Investment Officer at BMO Family Office. Tech boost. Fund managers are also boosting exposure to tech stocks. The NASDAQ 100 index has gained 17% in 2024. Shares of the 7 biggest companies in the S&P 500 are priced at an average of 36 times projected profits, compared with a multiple of 22 for the benchmark, according to data compiled by Bloomberg. Aggregate equity positioning has now climbed to its highest level since November 2021, when the NASDAQ 100 was at a peak. Data through the week ended June 14th, compiled by Deutsche Bank AG show. And reading on. Figure number 2, equity positioning, is now at the highest since November 2021 and approaching the upper end of its long-run historical band. Should the Fed adopt a firm, dovish stance, defensive corners of the market that pay steady dividends, like consumer staples and real estate, also become more attractive, said Terry Sandvin, Chief Equity Strategist at U.S. Bank Wealth Management. June usually marks a calm period for markets with lower trading volume heading into the summer, but next week has a wild card, quote, triple witching. Contracts tied to stocks and indexes expire on Friday, coinciding with the quarterly rebalancing of indexes, a confluence that tends to create a burst of volatility and high trading volumes, so that could disrupt positioning in the very short term. Next week could prove quite eventful for equities, said Frank Monkham, Senior Portfolio Manager at Antimo. Okay, guys, I thought that was a pretty interesting article. Some other headlines. Roaring Kitties, 262 million stirs, skeptics in meme stock era. Okay, guys, and let's head over to Tradingview now and look at some of our market headlines for Saturday. Okay, guys, some of our market headlines for Saturday that stand out to me. Binance co-founder beseeches Elon Musk to address cryptocurrency scams on X. Interest rates may need to go higher if the Fed wants inflation at 2%, and that is from Market Watch. Easing too soon would likely reignite inflation and require the Fed to hike rates again. The Fed should not lower interest rates until inflation hits the 2% target for several months. This looks like this is an opinion article. Let's go to some more of our other headlines. Let's head over to indices, see what our headlines are. Stock buyers are keeping S&P 500 momentum strong and volatility low for now. Big tech gains are incredibly rewarding, but its dominance has some ETF investors on edge. Up and down Wall Street, T-bills and AI stocks, the strange bedfellows of 2024. That's from Barron's. All right, let's head over and see some of our Forex news. Wall Street Dollar Index rises 0.34% to 100.07 from the Dow Jones. This is from yesterday. The Wall Street Journal Dollar Index rises 0.34% this week to 100.07. Data talk. The Wall Street Journal Dollar Index is up 0.34% this week to 100.07. Some of our key bullet points here. Largest 1 week point and percentage gain since the week ending May 24, 2024. The dollar index is up for 2 consecutive weeks, up 0.65 point or 0.65% over the last 2 weeks. Largest 2 week point and percentage gain since the week ending April 19, 2024, up 3 of the past 4 weeks. All right, let's head over to our dollar index chart. So as we can see here, headed over to our weekly chart, we do have 2 weeks in a row on the ICE-US dollar index. ICE-US dollar index closed on Friday at 105.165. Looks like that was the last print, and our prior 2 weeks have been higher. All right, let's see if there are any other interesting Forex news for today. Comment US recap, Euro USD undone by politics angst as dollar dodges data bullet. Let's take a look over at the Euro futures. All right, this is our chart for the Euro futures. We can see that our last 4 weeks on the Euro futures have been down. Our closing print on the Euro futures was at 1.07520. The Euro futures have been down for 4 weeks in a row, 4 black candles in a row on the Euro futures, trading well below that 20-period simple moving average towards the lower end of the lower Bollinger Band. And let's see what Reuters has to say about this. Headline reads, comment, U.S. recap, Euro USD undone by politics angst as dollar dodges data bullet. The dollar index rallied for a second day on Friday with European political risk aversion fueling the U.S. currency's rise to a 1.5 month high before disappointing University of Michigan sentiment took a bite out of the gains. The flight to quality also helped the safe haven yen recoup most of the losses it had suffered after the Bank of Japan confounded expectations that it would slow its government bond purchases following this week's meeting, opting instead to lay out details of its tapering plan at its July gathering. The Forex market also appeared to interpret comments from BOJ Governor Katsuo Ueda's news conference as less dovish than its initial take on the policy headlines. Let's have a look over at the yen futures. Yen futures closed at 0.0064475, or it looks like that last print was spot 0.0064395. And so you can take a look at the yen futures here. Yen futures were down last week. Looking at our daily chart, yen futures traded below the 20-period simple moving average on the Bollinger Bands, traded below intraday on the lower Bollinger Band, but closed the day at about the midpoint. If I'm being honest, that little hammer candle looking at the yen futures, that looks like an interesting idea on the long side, just looking at this from a technical perspective. All right, going back to our article. Federal Reserve Bank of Cleveland President Loretta Mester, who will retire at the end of the month, said Friday that the latest round of inflation data is good news for the economy and the central bank, but that she wanted to see a few more months of ebbing inflation data. She added, though, that it's important not to wait too long to cut rates. U.S. Treasury yields were mixed, holding firm at the front end while falling as much as 5 basis points in longer maturities. The S&P 500 slid 0.23% by New York afternoon trade, slipping from recent record highs as investors booked profits. Oil prices held slightly firmer on the day, while copper gained 0.35% and gold rose 1.33%. Next week, markets will scrutinize U.S. retail sales on Tuesday, so we do have news coming out on Tuesday. All right, let's have a look at some of our crypto headlines, see if there's anything on our crypto headlines. Biden admin officials, Mark Cuban, and more to attend crypto roundtable hosted by Rep. Ro Khanna. T-Mobile owner Deutsche Telekom will soon mine Bitcoin in addition to running nodes. 1 hour ago, the funding, do yield-bearing stablecoins have a sustainable future? Okay. Let's head over to our futures and see if we have any interesting futures headlines. Here's how to buy the dip in copper prices. This is from Bar Chart. The year 2024 has delivered a remarkable surge in copper prices. Let's have a look at copper prices so you can see it on the daily chart. Here's copper on a weekly chart. You can see that our last print on copper futures was 4.4985. So let's have a look at this headline. The year 2024 has delivered a remarkable surge in copper prices, with the red metal reaching new highs and posting an impressive 15% year-to-date gain as of mid-June. This price rally has outpaced even the notable year-to-date performance of gold, as supply disruptions, including recent mine closures, declining ore grades, and a ban on Russian metal deliveries, have tightened the global copper market. This has prompted major banks like Citi to declare the start of a new secular bull market in copper, with price forecasts as high as $12,000 per metric ton by 2026. Meanwhile, Andoran Capital is calling for copper at $40,000. Notably, Trafigura predicts that artificial intelligence and data centers alone could add an extra 1 million metric tons to copper demand by 2030, exacerbating an already projected 4 to 5 million ton supply deficit. However, even Trafigura doesn't think the extent of copper's current price surge is justified by market fundamentals. Likewise, Citi sees some near-term consolidation as likely, but believes that sub 9,500 per ton copper is an attractive buying opportunity for bullish investors and consumer, given the resilient end-use demand. Several factors are driving this expected consolidation. Supply disruptions, like the closure of First Quantum Minerals' Cobra Panama mine, along with production cuts from major players like Anglo American, have tightened the copper market. Additionally, Chinese smelters are cutting production due to lower treatment and refining charges, which is expected to further squeeze the supply of refined copper. Analysts at Goldman Sachs predicts copper prices could reach $12,000 per ton even sooner than Citi by the end of 2024 and climb to $15,000 per ton by 2025, driven by strong demand and ongoing supply constraints. In other words, the current market dynamics suggest that while prices may consolidate in the short run, the long-term demand drivers remain robust. This makes strategic entry points like the sub 9,500 per ton level suggested by Citi particularly attractive for those with a bullish outlook on copper. Okay, and reading the last paragraph here. With copper demand expected to soar due to decarbonization efforts, industrial migration, and the rise of EVs, now might be the time to jump on the copper train. Okay, guys, so just reading that article, we can see here from a weekly perspective, copper is still trading much higher than it was in 2023 and in 2022. Our last print on the week ending, what was that? Ending June 14th was 4.4985 after 3 consecutive down weeks. We did get a green print or an up print here on copper futures. Looking at our monthly chart, we can see from a long-term perspective, copper has generally been trading higher. And then looking at our daily perspective, I would hasten to guess from a technical perspective, I think that Monday's trading is likely going to be a green candle on copper, although, of course, I'm not certain about that. Okay, let's see if we can find any news headlines on crude oil. All right, this is from Dow Jones Newswires on Friday. Crude futures settle lower but post weekly gains, and this is from Market Talk. Oil futures slip into the weekend with their first decline in 5 sessions, but with gains in a week marked by conflicting agency demand projections, unexpected U.S. crude and gasoline stock builds, and benign May inflation readings that didn't seem to make the Fed less hawkish about interest rates. While OPEC kept its demand growth estimates unchanged, the IEA cut its forecast and predicts global oil demand will reach a peak by the end of this decade. Okay. All right, guys, with that being said, let's turn to some of the charts. We've read most of our news headlines here for Saturday. Let's head to some of our charts and look at where we're standing on some of our markets. Guys, let's start with the metals market. So I'm first going to start with gold, silver, and copper. Looking at gold, we're trading below the 20-period simple moving average on a daily perspective. Friday's trading ending at 2348.4. Our latest headline on gold, it's hard for me to find it. Okay, looking at silver. Silver closing at 29.620 was our last print. From a technical perspective, we are under that 20-period simple moving average, trading towards the lower end of the Bollinger Bands. Friday's trading was also higher on Friday. Friday's candle traded and closed above that 50% point of Thursday's candle on silver, looking like a technical reversal. Now looking at copper, copper traded higher on Friday. Its last print at 4.4985. We just read a few articles on copper. Copper failing to trade and close above the 50% point of Thursday's trading, still trading well below that 20-period simple moving average. Okay, any other metals that we want to look at? Looked at gold, looked at copper, looked at silver. Now let's take a look at some of our currencies. Australian dollar closed at 0.66320, below the 20-period simple moving average. 2 bearish candles in a row. Looks to be, from a technical perspective, in a trading range. Briefly looking at the British pound futures now. Pound futures closed at 1.2695 on Friday. 2 down days in a row, looking as though we might be breaking out to the downside following a period of consolidation. Euro futures traded, and its last print was at 1.0752. As we've been reading, there has been some weakness and insecurity in the Eurozone, which has prompted a decline in the Euro futures. We closed below, on a daily perspective, the 2 standard deviation Bollinger Bands, so we might see a relief rally here, I'm thinking, in the Euro on Monday. If not, then the market may be breaking out lower. Yen futures closed at 0.00644, trading below the 20-period simple moving average, trading in the lower half of the Bollinger Bands. 2 consecutive down days, with Friday's candle closing below the prior 20 or so trading days. So still seeing continued weakness in the yen. New Zealand dollar futures, largely the same as the Australian dollar futures, closing right on that 20-period simple moving average. Now looking at some of our indices on the day, let's have a look at the ES. The ES closing right near its all-time highs on Friday at 5,500.25. So that's 55 quarters. And we did read a few articles here on the S&P futures. Interesting looking 2 candles in a row. We can see 2 basically doji candles at the upper end of the Bollinger Band, trading well above the 20-period simple moving average on a daily perspective. But Friday and Thursday's candle ending right where they opened. So those are 2 consecutive doji candles. Not something that I think you see that often. Okay, now looking at the NASDAQ. Final print at 19,957 evens, closing at an all-time high, trading well above that 20-period simple moving average. From a technical perspective, we have 5 green candles in a row, and we're trading above the 2nd standard deviation on the daily Bollinger Bands. So I would expect some amount of consolidation here to come in the near future. Certainly in an uptrend for now. Russell 2000, final print at 2006.4. Russell 2000 not getting that same lift from tech stocks that the S&P 500 has gotten. Russell 2000 trading at its lower Bollinger Band. Thursday and Friday's action were both black candles. And let's have a look at the Dow. Dow closing at 38,982 evens. You can see we have 4 black candles in a row. Looking at the Dow from an intraday perspective, we can see that we had a push down on Friday in the overnight session, and then during the regular trading hour session, largely trading higher. Finally, let's have a look at Bitcoin. Bitcoin's final print on Friday at 65,980. These are Bitcoin futures. Didn't really find any particular news on Bitcoin other than people are talking about Bitcoin. Finally, let's see if we can get any news headlines on bonds. Big tech gains are, quote, incredibly rewarding, but its dominance has some ETF investors on edge. That's from MarketWatch. Reports of the petrodollar system's demise are, quote, fake news. That's from MarketWatch. Spooked by Apple stock's AI-driven gains. Take a look at its bonds instead. That's from MarketWatch. While politics rattle France, U.S. markets keep rolling on, and that's from the Dow Jones news wires yesterday. Okay, guys, with that being said, let's have a look at, we're going to close out here on our 30-year bond futures. And what I'm going to do is I'm going to show you the 30-year. All right, guys, this is the 30-year bond yields. You can see that as the bond yields go down, it is inversely correlated with the futures, which are on the left. So if you were trading a Topstep or an Apex trader funding, you're trading the T-bond futures, which are on the left, and not trading the yields. So as yields go lower, the T-bond futures go higher. So we can see that T-bond yields declined on Friday 1, 2, 3, 4 days in a row. So the T-bond futures are up 4 days in a row, closing at 120 spot 12 was our final print on Friday. 4 days in a row higher for the 30-year T-bond futures, trading at or above the daily upper Bollinger Band, so 2 standard deviations higher, trading well above the 20-period simple moving average. From a weekly perspective, we are trading above the 20-period simple moving average, and it looks like we're targeting from a weekly perspective that upper Bollinger Band at 122.19, indicating that bond yields are probably headed lower. Okay, guys, with that being said, that is going to finish up my video. It is Saturday, June the 15th, 2024. If you like this content, you want to support this channel, please make sure to use the affiliate links in the description box below.